Folks, welcome to... Wow, look at all the comments here. I'm so sorry I'm late. We had a blizzard. My wife's going to work, and I had to dig her out. So my apologies. Great to be here. Thank you for being here. Thanks for your patience. And pardon me, I'm a little bit out of breath. I ran back in. Let's go through. Yes, I'm live. All right. Okay. Franklin, MacArthur, Joseph, hello. Trader Isaac, Big Bear, hopefully you guys are still here. RB, Chinner, welcome. Not much snow here in South New Jersey. What part of South Jersey at? I know Cherry Hill, Barnegat. Bob, you need to move to Central Florida. You're not kidding. Sam, how things over in Italy, my friend? Falcon. Hello, everyone. Okay, let's get to it. Small crowd tonight, I guess because of the Super Bowl. That's okay. Let's see how we're opening up here. And so there was a lot of chatter. Yeah, Janet Yellen that was interviewed on CNN, not that they're a news station, but she was interviewed. She was asked about Larry Summers, who was the Treasury Secretary under Clinton. And he was not happy with the size of the stimulus package, fearing inflation. What else is new? You should be fearing inflation. Finally, people starting to talk about it. And she was asked about the comments. All she could do is say, the poor children this, the poor people that, they need money. I'm telling you right now, they don't care about inflation. They're going to try to inflate our debt away. So I'm surprised the dollar's not down bigger, but we are down. We're just barely holding on to 91. They're going to fight it here. We had a good, strong beginning of the month. Last month, very strong. Is this the end of the bull run for the dollar, the short-term bull run? Counter trend rally? Maybe. We'll see. My guess is that gold is probably catching a bid here. And it is. It's not up huge. We did have a weekly breakdown last week on gold. The miners did very well. Silver miners did very well. I shouldn't say the gold miners did very well. They closed off the highs of the lows of the week, which is good. So the NASDAQ up a 0.25 percentage point. And let's check in with the Russell 2000. I'm going to go over a chart, long-term chart of the Russell 2000 in a moment. We have RSI on a 4-hour time frame above 80. We're up well over 1/3 of a percentage point at the open here. I think you're going to find the long-term chart I annotated pretty interesting. The NASDAQ 100 up over a 0.25 percentage point. And attempting to break out here. What I want to do is, I think that if we put in a new daily high tonight, I think you may see sector rotation into out of the small caps into the larger caps. Okay, so that's good to go. Bitcoin up huge, big breakout here out of an ascending wedge formation. You know, those people that were talking about a bubble back here, I said it wasn't a bubble. That's not a bubble. It's not a bubble. And sure enough, we pulled back healthy W formation. I think we're going to make new all-time highs probably within the next week, week and a half on Bitcoin. Bonds, bonds had a huge breakout. We're going to go over the chart of the 10-year yield. You got to watch the 10-year yield, folks. At some point in time, traders are going to take notice that bond yields are ripping through the ceiling, and not just ripping through the ceiling, they're breaking out. So beware. That could be one of the triggers that just makes the market not crash, but start thinking twice. Profit taking begins, cascade effect. We have the largest margin debt in all history right here, right now. So when those margin calls come in, forced liquidation, not going to be pretty. But I think as long as you have a $1 trillion tsunami of cash coming at this market, you're probably going to see higher highs longer term. Crude prices, look at this. Crude prices are up well over a third of a percentage point. They were up over 6.5% last week. Home heating oil, I told my wife, call them, get a full tank. I'm arbitraging my home heating oil. Beautiful breakout here, home heating oil. Let's go back to comments. Hey, Kat, do I follow XRP? I used to when I owned it, not any longer. I did pull it up today because I know after the SEC got involved, it plummeted, and we did see a rally back, but we have pulled back since I last looked. Larry, your weather girl is Amy Freeze. The last name is a problem. Get rid of her. Good point. Dogecoin. I don't even know if I'm saying that right. Is it Dogecoin? Dogecoin? Hey, Bob, thought Twitter on the big dip, 46.78, took profits. 5% trailing stop, 3% trailing stop. Wherever you're, I think it's a good strategy. Well, I think it's a very good strategy. You're nearing all-time highs. We'll go over Twitter in a moment. So what we're going to do here, folks, for those that are brand new, we're going to go to about 7 o'clock tonight, maybe a little bit longer because I'm late. We're going to go over first what we just did, the opening futures action. We're going to talk about some of the headlines, economic data coming out this week, the data that was released last week. But first, I need to talk to you about, got to pay the bills, our friends over at TrendSpider. Folks, we're going to be using TrendSpider tonight. Don't settle for ordinary trading software. Don't automate your grunt work, speed up your analysis, find winning trade setups using the market scanners. I've been playing around with them a lot lately. Pretty interesting stuff. Once I develop my own, I'm just going to name them, make them free. Some people are selling them. I'm not going to sell them. But there are other ones that are pre-made for me. I'm having a good time with inside bars. Like you can set up a scan to scan for 3 inside bars, whether it be daily, weekly, 15-minute, whatever. It doesn't matter. That's a sign of a consolidation. If you're tracking strong stocks, you want to see that, then watch for the breakout. So the scanners are really good. Time your trades with precision using the alerts. I'm going to be using them tonight when we go over chart requests. First, we go over members chart requests. Then we'll take super chats. And then if we have time, I'll take some requests from the audience. So let's get to it. 35% discount code on TrendSpider below. If you're not using it, you're trading without an arrow in your quiver that your competitors do have. Trust me, and they're using it quite successfully. Just check Twitter. It's a lot of people doing a lot of good things with TrendSpider. Okay. Let's go back to comments. I'm late, so I want to make sure I get everybody. Snow chart request. Always the same. Sam, always the same. Bob Draghi will form a government. And you saying he's going to try for a stronger euro? That's good for us. Hey, Pat. All right. Let's get to it. Last week, and we've been going over this chart for months now, and I drew this red line as the upper band of resistance for the 10-year yield, because every time we hit it, we generally roll over. Not last week. We broke out. And this is pretty significant. The bond market took it on the chin. It was assassinated last week. A major breakdown. And when you take a look at the yield curve, which I'm going to be going over every week, they just won't acknowledge the fact that there's a steepening yield curve. It's generally not good for the overall stock market. Traders just don't care. There's too much hot money out there. They don't care. There will come a point when they do care. You see a headline cross. Bond yields are moving up higher. You'll have a bunch of concerns about what it means for the market. That means that your banks are net short. They're out of their long positions. They're now net short. And they're going to try to spook the market, send it down, and trigger that snowball of selling that you get when you get your margin calls. Forced liquidation. That's going to be the next trade. So, steepening bond yield, validated by the 10-year yield. Folks, watch out for this. This is no joke. I was doing some analysis of the monthly chart of the S&P 500 going back to the dot-com era. And I played a bit of connected dots. And I connected prior peaks. And I didn't connect to this peak, obviously, because it was a lower high. So I connected to the most recent high, where we pulled back slightly. And we have broken out above this ascending wedge formation. Very, very extended relative to the 20-period moving average here in green. In fact, we have never been this extended away from the 20-period moving average ever in history. And when you take a look, before I leave here, I did an average of the, I didn't do averages. I did a range of pullback. Back here from 99 to 2001, we saw a retrace of 50%, nearly 51% on the S&P 500. The financial crisis, nearly 59%. Most recently, earlier in 2020, nearly 35%. I'm predicting that if we get a correction right here, right now, without putting in a new higher high, we would be at a 22% correction. Technically a new bear market. I don't really believe that. I think that we could get a 20% pullback, 22% pullback to this lower band of support. I think that with all of the liquidity coming into the market, and don't think that this 1.9 trillion is the end of it. It's just the beginning. This is going to keep going on. MMT, modern monetary theory. They're going to pay people to stay at home, shut up, be obedient, and buy on Amazon. Simple as that. So we have broken out. The question is, how long do we hold this breakout? And if we fail to hold this upper band of resistance, I'm predicting right now, a 22% correction on the S&P 500. Now, taking a look at the Russell 2000 weekly chart, if you don't have your automated trend lines on, you would think that automatically we are going up higher. And believe me, I think we're going up higher. Do we close there? I don't know about that. Why? It's because we have stiff resistance above. In fact, we are on the IWM very similar to the S&P 500, where we've broken out and above the upper band of the rising uptrend channel going back to the early 2000s. The correction from 2002 to 2003 was about 41%. That was a counter trend rally higher off the dot-com crash. What do we have here? In the financial crisis, a 60% pullback. I didn't measure this one here because it didn't hit the upper band. The last time we hit the upper band was back in 2019. 2019? No, 2018. And we pulled back 28.4%. I think that if we fail to hold this breakout point on the small caps, we could see a 37% retracement back down to this lower band of support. So those are my thoughts. Is it going to happen this week? I'm not betting that. I thought it might happen last week. I was wrong. So I'm not saying that it's definitely going to happen. I'm just saying that we are on very, very, very thin ice. But then again, with all the insanity, all the hot money floating out there, nobody cares about PEs. Nobody cares about yields ripping through the ceiling. So you got to tip your hat and don't get too overly aggressive to the short side. What else do we have? Let's bring up economic data. I think only the big report on earnings coming out next week is Cisco. And that doesn't mean much anymore. And that pretty much signals the end of earnings season in my book. So this coming week, nothing on Monday, economic-wise. On Tuesday, though, we get the NFIB Small Business Index. Watch the small caps on this report. This can move the small caps. Job openings, consumer price index. Fly just flew into my face. Consumer price index or the consumer rigged index. Watch this. Core CPI, that's when they back out food and energy. That's what the Federal Reserve claims is their real number because food and energy are too volatile, so they back it out. Unless, of course, the headline number suits their needs and they'll cite the headline number. You know, it's all BS. Thursday, initial jobless claims. I mean, last week, initial jobless claims, you know, they touted it as a win for the economy that we only had 779,000 initial jobless claims. And then they went over on Friday and they said, well, you know, non-farm payrolls are pretty good. Unemployment rate dropped, but nobody wants to pay attention to this. This economy is in meltdown, and nobody wants to pay attention to it. They're going to bid stock prices up higher. Okay, let's, what time do we have? 6:31 already. Wow. I have a bunch of chart requests to get to from members first. Kat, is it a bubble? You know, I think that we could say this, right? I think we could say that what we do have is a debt bubble, right? There's no doubt about that. And you know, if the Federal Reserve loses control of the debt bubble, if you continue to see yields spike up higher, remember what that means for government borrowing. You know, they have to, when you see the 10-year yield, 30-year yield, 30-year yield move up higher, the cost of our borrowing goes up dramatically. So while we may have more debt than we've ever had in history, believe it or not, the amount of interest that we pay every year is not at all-time highs. Why? It's because yields are artificially low. If they were ever to even get near normal, this economy would be in utter free fall. Housing, I don't think so yet. I think it's too early. I think if yields continue up higher, that may just take a lot of the froth off of the housing rally. I don't think it's a bubble yet. Yeah, I do remember when GE's earnings meant something. That was a long time ago. Yep. Okay. Let's do some chart requests using our friends over TrendSpider. Folks, if you're just joining in, 35% discount code using TrendSpider. Discount code CON35. Use the link below and you'll get set up. And again, I apologize for being late. The German in me is always on time, but I had to get my wife out of a snow jam. Okay. QuantumScape. I don't know this stock. It's brand new, that's why. Okay. I think with this one here, it's got to hold 40.56. I think it's good support. I think this could be bought with a stop loss right below last week's lows. I would stay small, and I would add more on a rally and a close, more importantly, a close above 51.56. So QS, we'll track it. Okay, so I would also be interested, were we to touch or bounce, a little bit of a pullback, keep a little bit of sensitivity. And before we log off, I'm going to go back to the futures, because that alert on triple Qs breaking out to a higher high hasn't fired off yet. That tells me that there's not a lot of oomph behind this gap up today, but we'll circle back. Daily chart. QS is a symbol. A lot of the feedback I've gotten, I've been asking people for feedback, and some of you that are watching this could never. I'm not a big person of watching videos on phone. Excuse me. My family is. I really apologize for that. My family is. I'm not. I'm old school. I have a laptop. I have desktop. I use that. So the feedback I've gotten is that people would appreciate if I say the symbol, and I usually do, but maybe sometimes I don't. And that way they're able to appreciate the chart a bit more. So any feedback that you have, please let me know. And Pat, you got to stick here. Forget about game time, man. All right. So one thing I want to point out here is this raindrop functionality, the overlay on QS daily time frame. See this blue doji formation corresponding with the candlestick doji star, and we pulled up higher. Very good. Very good price action. So we may be setting up here for a higher low, an ascending wedge forming. I like it. You know, it's a recovery play. Although it's a new stock, it's a recovery play, not a momentum play yet. So it looks good. I would just wait for the breakout or a pullback and retest of support, one of the two. And if you folks, if you could do me a favor, please smash the like button so that your team wins. You like that? Kind of slimy of me, but I'll do it anyway. QS KMPH. It'll be good luck for your team. KMPH. All right. We'll come back to the daily. I don't know this stock. Let's go to a monthly. All right. So this can't be bought yet. Here's the value of the automated trend lines. Click of a button. All I want to know is this. When do we break out? In fact, I'm not going to set this alert here. I'm going to do it on a weekly time frame. This is a weekly time frame, KMPH. I'm going to overlay monthly resistance and support on a weekly chart. And this is what I care about. A breakout. Now, one other thing I picked up on this chart is that we have a volume shelf right above here. I'd be okay. We close above, let's use the high, 778, scratching the itch, maybe putting on a trade there, but stay small. And we're good to go. Daily chart. Yeah, we're struggling to get through that volume shelf. We got to close above it. Our alert's set. We're good to go here. If we close above it, good stuff. We scratch the itch, open up a small trade, then wait for the ultimate breakout. Above. Good. Is it showing on a daily time frame? Yeah, okay, yeah, good. Let's go back to the daily chart. There's our alert set right here. All right, so we have two of them set. We're good to go here. KMPH, looking good. And look at this blue doji here on the raindrop chart. That was on a gap down. What do we do after flashing that blue doji? All the way up. VIAC. This is for Tuan. Viacom. I'll go with the Class B shares. Daily chart looks very, very good. Weekly chart first. You got resistance right up here. Where do we close? Close at 54.04. You have really stiff resistance at 57.59. You saw that we were rejected 2 weeks ago when we tried to rally through it. We need to pay this some respect. Daily chart. I think if you get a retest, you can open up a small position. There we go. And if we get the breakout up here, that's the money breakout. And we'll keep this active for 7 days. So our alerts are set. They're over here. I just want to check out seasonality. February is a fantastic month for Viacom. This is a fairly good season for the shares. August is a real sexy month at the end of the month to start piling in, because then you get, look at this, month after month move up higher into the new year. So Viacom is looking good from a technical perspective. We do have some obstacles to overcome, but seasonality is favorable. It's looking pretty good. What else do I have? T. Twan's into the telecoms, man. All right. Monthly chart. A lot going on here. All right. We're going to remove this. So we've been pulling back. We retested the breakout point. This is a tough one. Let's go to the weekly chart. Yeah, you got a lot of resistance up here. I don't like it. You have so much resistance here. We'll come back to the weekly chart. All right, this is a show me stock. Here's the call. Let's get rid of this. All right, this is good enough. So here's the deal with T. You have a lot of resistance above. This is a good yielder. So if you're buying it for the yield, you're buying it for an investment, you know what? We're putting in higher lows. Scratch the itch. We're all good there. If you're trading it, different story. You're not buying it for the yield. I would wait for a breakout weekly time frame. But I would stay small. The reason is you have a ton of overhead supply, resistance. Now, so if we close above this upper band here, let's say at 29.20 per share, right? We close above that mark. Where do we begin to add more? Right up here. You're going to have to pay up for security. $30 a share. 30.20 to be specific. That way, you're beyond all of this overhead supply. Because this could be a meat grinder. Keep this active a while longer. It is a yielder. If we begin to break out above these resistance levels, I would be interested in it, but not right now. I got too much going on. I have plenty of speculative trades on where I don't want to speculate anymore. I'd rather keep cash on hand, speculate a little bit, and build on core positions right now. PTON. Peloton. Nice consolidation here. I mean, this reminds me of Snap, reminds me of Pinterest. I went over those on the week ahead commentary. I like the setup here. Damn it. In fact, I'm sure that these probably have puts, options. You may want to think about selling puts at the 140 strike price, average your cost down. That's one way to trade this consolidation. Just be aware of the risks that are involved with it. You know what? I want to get alerted pretty quick. Good. And we'll go 10 days here. And then I want to know when we break out. Okay. So we're set. Set it and forget it. Let's go to a daily chart. See if there's anything else going on here. You can see by the raindrop chart here, and for those not familiar with raindrop charts, it's a mixture of candlestick as well as VWAP, volume weighted moving average. So this is proprietary to TrendSpider. So you can see this this raindrop chart. The left side represents the morning, right side represents the afternoon price action. The fact that we have a big fat belly, I call it a pregnant candlestick or pregnant raindrop, whatever you want to call it. Call it cupcakes. It doesn't matter. It's a bullish candlestick. It means that you had volume into the close, bidding the shares up. Despite the fact that we closed down on Friday, it doesn't matter. Net, you have good money flows at the end of the day. It was under accumulation. So that's a good sign. Doesn't mean it's going straight up from here. It's just a sign that, okay, traders are coming in, buyers are stepping up, and they're probably going to boost the shares pretty quickly. Seymour, whatever reason, it was retracted. They didn't block you. Okay. Big Bear, I bet they settle at 1.2 trillion as a compromise, so everybody faces. I don't think they care, Big Bear. I think the last thing they wanted to do is to save face. I think they want utter humiliation. And you know what? The Republicans deserve it. They deserve it. Not being political, but if you're not going to have a set of cojones, you deserve to get beaten up and humiliated. Like Pat would like to see the SPY contract. Did you buy the puts on that, Pat? You sent me a text on Dogecoin? All right, my phone's charging. I didn't get a chance to take a look yet. With all the stocks that have working, why trade T? It's a good point. Yeah, one of the reasons is that T is a good yielder. That's one reason. Cena, if the market goes to correction, do you think we need to be long of FAS? No. The banks are going to trade with the overall market. When yields are moving up higher and the market's moving up higher, you want to own the banks. But even if yields are moving up higher and the stock market corrects, 80 to 90% of all stocks roll over anyway and go along with the rest of the market. So, no, I would not be a buyer of the banks as a bet that they're going to outperform the S&P 500 for any length of time. That's probably not going to happen. Trade Isaac, PTON, you bought the dip 144. Good for you. I'm with you on that. Pat, in some February 19 SPY puts, what strike? I hate front month, man. Let's take a look at the futures really quick. That Q alert never fired off. Let's see what the NASDAQ 100 is doing. That's the micros. Here we go. There's no volume. There's no volume. See what the other indexes are doing. The Russell, of which I am short and getting my you-know-what kicked right now. The thing is with the Russell 2000 is this. Even on a shorter term time frame, we had broken down. And they're limping it back up on very, very light volume. Very light volume. Now we have RSI 81 on 4-hour time frame. If you pull back, where were we back here? I think we're very close to a short-term peak here on the Russell 2000. There's no volume. The chart looks good, but if you don't have volume behind it, it makes it difficult to maintain. Where's my S&P 500s? New weekly high, but do we fade? See what bonds are doing? Not much happening there. What's the VIX doing? Nothing happened here. No anomalies. All right. Let's do some other chart requests here. Snow, Trader Isaac. Blue Doji, I think this goes higher. I think that this could be bought. I like the price action here. I love the Blue Doji. And I would get more aggressive to the long side on a breakout and a close above 313.84. Because that's your validation. If you get that, that means that you were accurate in your initial opening test of the market. Good looking chart. I like it. Pat, February 387 puts. Why'd you go with the front month out of curiosity? Oh, see, so you bought at the monies. Gunslinger, you gunslinger, you. I like the strategy going with the front months. Excuse me. I like the strategy with going with the at the monies. I don't love the strategy with being front month on those contracts unless you're hedging. The time decay just keeps me up at night. I would have felt more comfortable going out 45 days, 60 days on them. Once you get into that 30-day window, that's when the time decay yield really starts to pick up. So it's good that you're at the money with them. Monday we'll see 368. Your lips to your words to God's ears. You bet, Trader Isaac. MBIO. Mustang Bio. We've gone over this one before, right? Excuse me. Biotech's on fire right now. It hit good support at these volume shelves. You know, kind of in no man's land here because we've broken out, we've rallied some. I believe we're at all-time highs or close to it anyway. Just want to make sure. Oh no, we're not. We do have resistance above. So this 494 mark has acted as resistance many, many times. Here, here. You want to argue here, close enough for government work. Here, here. Now we're setting up for another attempt to break out and above it. If you get a snapback tomorrow to 455, that's a good place to scratch the itch. Pick up a few shares. I wouldn't get overly aggressive till we get the breakout. Come on, Bob. But up here, this is the money breakout. So, listen, if you're going to buy no matter what, if you don't get the pullback tomorrow, you want to buy a little bit on a continuation breakout, a weekly time frame, fine. But just be aware. Remember this monthly chart, right? This has been stiff resistance for a long, long time. That being said, you know, the longer the consolidation, the greater the validation of any breakout. So this is really a good thing. But if you get that breakout and the close above resistance, I mean, that's sexy stuff. So daily chart, yeah, I think the game plan we have here is sound. So that's my take. MBIO. They're giving up the pop? All right, I want to circle back to them. It's not going to surprise me. MacArthur. MacArthur. I always say MacArthur. Mac Carter is the appropriate way to say it. Mac Carter. I'm learning. All right, so you know what I'm going to say here. It's trading up to its 3D Bollinger Band, so automatically it comes off my watch list. I can't buy it. Beautiful breakout last week. You may get a retrace. If you can get a retrace down to 1884, very, very nice. That would be great. Keep a little bit of sensitivity. There we go. Not that much, Bob. Not that much. Okay. What the hell's going on here? All right, I'm not correcting my spelling here. Weekly. Jesus Christ. Okay. So a retrace would be very, very nice. 1884. Daily chart. Got to get that pullback. I would not chase it. I would not do it. How many uses that? One, two, That's a real symbol. Cool. Very nice day on Friday. Beautiful breakout last week. I mean, wow. Really good stuff. Really, really good stuff. Who doesn't want to buy a stock with a symbol U? I love that. All right, so we got the breakout. Many times you'll see a retest at around $4.50 per share. It doesn't have to be to the penny. Good looking chart. I wouldn't chase it. We did close out the day on Friday above the 3D Bollinger Band. So wait for that pullback. You'll probably get it. Let's circle back to the futures. Dollar really weakened up here now. Gold, not capitalizing on it. We've pulled back a little bit on gold, even with the dollar down. Look at this. I guess it could be because of the Super Bowl. We have to take that into account. Very light volume. Russell 2000. Stalled out a bit here. All right, not much happening. I think there's a Super Bowl effect going on here. Bitcoin just flying. All right, with that, folks, quiet night. Sorry I'm late. Thanks for joining us today. Smash the like button. Don't forget the TrendSpider discount code. And it's also free with our silver and gold level memberships. And smash the like button. Subscribe. And everybody have a profitable trading week. Enjoy the game. Be well.